Hello, today is the 2nd of November 2024. We'll start with our disclaimer, go over our calls, make some predictions. It's the weekend, we'll take a look at the long-term picture. This is my trading plan for Monday, which is November 4th, 2024. Remember, I can be completely wrong. Any trade you make should be made at your own risk. Also, Monday through Thursday, I may not be doing any trading, and I may not be able to watch the market during the day because I have personal business. Friday's call was for the pattern with the early low, which is this, and Monday should have the early high. Here's what we said. We said the commonest thing was a gap and the prompt move outside the day's range. We came awfully close. We got the gap. We didn't close outside the day's range, so that didn't happen. That put the next most common thing into play, which was to close a little change. We didn't do that. I defined that as 0.25% or less. That's too much. So it was one of those days, neither one of those things happened. These are the patterns we should see next week. We thought that after Thursday's collapse, it was a good possibility of a major low and possibly rallying into year end. Well, even though we collapsed, we wanted some things to happen. First of all, we wanted to show this was panic selling by gapping and taking out this high. We got that. We had some price targets you wanted to be seen. 57.36.71, that printed. 57.51.62, that printed. So far, so good. But then you wanted to take out this high, and that never happened. Close, but no cigar. The importance of taking out the high is that when you're going up, you want to make higher highs and higher lows. And if you don't make a higher high, you're just consolidating within the range, and that doesn't prove anything. Now, that's not good. What is good is that after dropping all day, these lows held. This is the close. Those lows held. So at least as far as Monday is concerned, we're going to probably trade up, and we have a minimum target of 57.40.11 unless we gap down smartly. That's my call. This is a wall with gap pattern. This is an unstable pattern. The rule is the longer the pace, the bigger the move, and the worse the base, and that isn't much of a base. It's a V bottom of the gap. These things don't hold forever. They should undercut this low at some point. Doesn't mean we can't go up first. Also, this is a pattern which is usually positive, and when it isn't positive and doesn't get invalidated early, it tends to lead to lower prices even if they don't come immediately. So regardless of how high we go here, I think that's going to be undercut. Also, if this were the major low, I'd expect a 5-way move up, and that is not a 5, that's a 3. So I think we're going to have an ABC up. This could be A, that could be B. There should be a C, but then one more wave down. Well, during the day, MEJT said this rally was not for keeps, it was false. We already retraced. Now says this drop is false, also gives us the higher target. This is a daily chart. We had the recycle of the DeMark count. This in green is the combo signal. It's a 13-bar pattern. It doesn't have to go to completion, but when it does, you're overextended. And if you top there, it should be a sizable top. Doesn't always work, but at least it gives some indication of where the rally stops. The last 3 bars don't have to obey all the rules, so it could be 10 or 11. It could count this as 11, 12, 13, but more convincing to me would be if we had another rally first, and that B wave we were talking about hit a few more bars and then give us bar 13, or at least it would be more plausible to make a top. Well, here's my long-term call. I think we're in wave green 1 of magenta 3. We're waiting for wave 2 to finish. I think we had a pretty clear ABC down, and that was probably A. And I think we're in B, which I can't count as complete. If this is A of green B, and if we stop here, there should be some kind of Fibonacci relationship to A. And if you set that at 61.8, you could have a rally way back up here, and not change anything, and that's over 100 handles. Let's take another look at the same chart, a different interpretation. We are making back to back to back to back diamond on stilt patterns, which is very, very common. So here was the last stilt. Here's an obvious diamond. Here's your diamond. And here's the origin of the left stilt. So we have a stilt down. That, my friends, is a diamond. That's pretty obvious. Now these patterns don't have to go to completion. They don't. We could just keep on dropping. But if it goes to completion, there's resistance at the origin of the left stilt. So if that's 61.8 and we stop at Friday's close, the origin of the left stilt is really right there. I mean, that's pretty close. So if this is the right interpretation, we only have to go to 57.40 and change, but there's nothing to stop us from going 100 points higher than that, give or take a little bit. I don't think it'll last forever. I think we'll undercut that low, but that's a lot of upside if we get it. That doesn't mean it has to happen. It means it doesn't change the general idea that eventually we're going to undercut that low. Well, Monday's pattern has the early high regardless of where we open. Typically it's a weekday with a final hour low, but if it's strong instead, we should get more strength. There's a higher target unless we gap down smartly. The rules call for it to print. Thursday's collapse was followed by an inside day. Larry Williams' rules say we trade higher Monday regardless of where we close. No follow through. Although 57.40.11 is all that's required by the MEJT system, the wave count, the VIX-Bollinger Band reversal, and the failure of Friday's day-long decline to undercut Thursday's relative lows all are compatible with a rally much stronger than that. It's not required, but it certainly is plausible. Nothing prevents nor requires a complete retracement of Thursday's drop back up to the origin of the left stilt. So if that happens, and that hasn't happened yet, but if it happens, we'd likely trigger bar 13 of a DeMark combo sell signal, and the RSI under 50, a sign of a weak market, weakening breadth. Here's the breadth index, and the wall with gap pattern all argue for Thursday's low being undercut at some time. So if that happens, the conditions are right for completing an ABC down. So as far as Monday's concerned, all I'm saying for sure is that if we don't get done smartly, we're going to say 57.40.11. But I'm open to the possibility we rally much higher than that, even as much as 100 points higher. We could complete the inverted diamond on stilts, even though it's not a requirement. It happens often. And if that happens, there could be another big drop, undercutting this low. And it doesn't have to be by a lot, but it certainly could be. And after that happens, I think we've completed an ABC down. Then we'll have to reassess the situation. A lot of people think that when the September-October period, usually a week period, is strong, that the rest of the year should be strong. Actually, quite the opposite's true. The strongest end-year rallies happen when September and October is the weakest. And when September and October is strong, the rest of the year is not as good as it normally is. So I'm not super excited about what's going to happen here. I would have felt differently if we rallied in 5 waves here, but we didn't. So higher Monday, unless you gap down, maybe much higher, one more drop, and probably by the end of the year we're going to be back on the upside again. But I don't know if I want to sit through the rally and reversal first, if that even happens. So it's the pattern with the early high. Here's the target. No reason to stop there. Probably won't. And that's today's call.